Hi all. So today I'm going to give the recap of SPY November 13. The chart I have is on the 5 minutes time frame. Today it opened below two support levels, as you see on the screen. It came all the way back down till this previous resistance. It acted as a support and it moved back up to the opening of today's price, but then it could not close above today's opening price. And if you look at this candle at 10:15 Eastern, it collected the liquidity above 20 EMA. By the way, the blue line is 20 EMA, the red is 9 EMA, and the purple is 5 EMA. And it's a clear inverted hammer candle collecting the liquidity about 20 EMA. So one would have entered a short position here, targeting the previous support, keeping stop loss right above this inverted hammer high and targeting the previous support. That gives more than 1:2 ratio. So it's a good trade. And you can see here also at this resistance, bearish engulfing, bearish engulfing, and a evening star pattern. Doji followed by a bearish engulfing. So as soon as this setups broke, it moved down further. I was looking for this bearish. I was actually bearish bias because of a couple of reasons. I'll show you. If you go to the weekly time frame, and if we take the fib extension from the April low, to the breakout in the previous all-time high, you see October last week we got a clear doji at 61.8% fib extension, and then last week it was followed by a bearish engulfing candle. That is where my view turned to bearish bias. But if you look at this RSI, you see a divergence, bearish divergence here. If you move to daily time frame, even though, see, because it was clear support took out from the trend line with a hammer on Friday and then nice gap up on Monday. But then yesterday it closed as a pin bar, hammer at the top, and if you look at the fib from this 5 days low and the all-time high, it couldn't close above the 78.6%, and it closed with a nice hammer at the top. And there is one another reason I was bearish, because while even though we had a gap up on NVDA like we had in SPY, if you go to the weekly, previous week was nice engulfing, bearish engulfing candle, and that gap up did not close above the 50% of previous week's bearish engulfing. Sorry. So if you see clearly, it could not break the 50% of the previous week bearish engulfing, even though we had a nice hammer on the trend support on Friday and superb gap up on Monday. That's more than 5%, but still it could not close above the 50% of previous week's bearish engulfing. I'm sorry, it closed above on Monday, but if you look at Tuesday, it gapped down below the 50% of previous week bearish engulfing, and then it could not close on Wednesday above that 50% people level, and that's where it caused concern. And if you look at those candles, it's all bearish candles, though it does hammer, it did not close above 50% of previous week's bearish engulfing. So I think it's a bull trap. So bull trap candle, just collecting the liquidity. See, all three are red candles followed by that gap. It filled all this gap, but it's still under the channel support. We see how it goes in the coming weeks. But I think it's gonna, but we'll have to wait and see. You can also notice this double top. With nice dojis, that is also bearish dojis.